Hello, it's Big Cheds, and this is part of the Trading Encyclopedia Daily Education playlist on my YouTube, Cheds Trading. Find me on Twitter at Big Cheds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the death cross. We've talked about the death cross and the golden cross before together. Now we're doing an individual video just on the death cross. Now, here's just a quick view of moving average basics from Trading Wisdom, which is lesson 41. And you can see a few things here which we're going to talk about with the death cross. So the death cross typically means the 50 crossing the 200 in a bearish way. Now, in theory, a death cross could be a 5 crossing a 10 or any shorter term moving average crossing below a longer term moving average, right? But typically it's referring to the 50 and the 200. So this should be done with simple moving averages. Again, longer term moving averages should be simple, equally weighted. Here I have the orange lines, the 50 and the 200, which is the trend in classical charting I have as a blue line. With moving average crosses, a really important concept is the trend before it. So if everything is sideways and your moving averages are crossing in a sideways market, it really doesn't mean anything. There's no real trend. The whole idea is you want a trend to reverse. So what you want to look at is how sharp that short-term moving average is crossing. So if this is your longer-term moving average and the short-term moving average does this, it doesn't mean as much as if it drops and crosses here. Essentially crossing on the first attempt, likely after some type of a major price breakdown. So you want to look at the slope of the shorter term moving average as it's crossing the longer term moving average. You also want to look at price distance to the moving average cross. So for example, here we have a bearish cross, a death cross. But when the price crosses, it's closing, it's right down here. So there's already a decent amount of the move already baked in. So same thing here with the golden cross. The move was already baked in. It took time to consolidate. The best case scenario is that when the moving average is crossing like this, the price is right there at the cross, very close to where the moving averages are crossing. That way the move isn't baked in. And you can see that here in moving average basics in Trading Wisdom. So essentially, you want to look at the direction of the trend before the cross. You want to look at the slope of the trend, and you want to look at the price distance of the cross to the price. And this is the death cross, and this is the Trading Encyclopedia Daily Education playlist on my YouTube, Cheds Trading. Catch me on Twitter at Big Cheds and Bitcoin Live. Hope you're doing well, folks. Thank you for being here. I'll talk to you soon. Big Cheds out.